Hey, welcome back, YouTube. My name's Ed Jackson, and this is my channel, Trade with Ed. Now, it's kind of a bit of a late post, but I wanted to get into what happened in today's market. We're just gonna go ahead and get right into it. CPI came out this morning. Excuse me. CPI came out this morning. Kind of a Goldilocks-y type scenario. It pretty much headlines came in at as expected for the most part, but still, when you dive into the details of the reports, their inflation was still kind of high, and you have to keep this in mind. The CPI took out the most volatile or important parts, which is food and energy. So we know it's still high, but it's part of the Fugazi. They got to finagle the headline top number. So let's go over to the charts and bear with me. Still getting used to this whole switching over here. I usually have everything like on separate monitors, so when I'm trying to do this video, the way I have to send it through here, I'm not used to it. That's what I'm saying when I'm trying to switch windows. But anyway, you see, we finally got into our pending order here. This is an hourly chart. I'm not gonna get too deep into what I think happens for liquidity. I just know it took out this top line liquidity retracement from I think this was like September 20th. Like I said, I like to trade the leftover liquidity zones or leftover unstopped out orders that Asian London session leaves by. So that's just my strategy. I just mark up levels where during the Asian and London session, price never came back out to stop out or liquidate those orders. So, excuse me. Like I said, my thesis here, I'm gonna switch this to the daily. I know my chart is messy. I'll figure out a way to be better at keeping a cleaner chart for you guys to look at. This is the way I chart, so just gotta bear with me. Everybody trades differently. It's like a million ways to trade, and because we all have different personalities, so I'm a bit messy. Bear with me. Anyways, we're back on the daily. Last recent swing high of July to October 27th. So from that high to low, we already exceeded our 61.8 retracement zone, which our liquidity from, I believe that was the Asian London high from September 21. It liquidated those zones if market makers were in drawdown. So they hedged back up using an equal and opposite trade. So if they were in sales here, if they were in sales here, they had to push the market down and wait to get liquidated out. Well, that's just my theory. The point is, they had to come back to this zone. So not to get too long-winded, but they came in, liquidated, and we have trendline break and retest. Let's switch back to the hourly, that way we can see it a little bit better. So our main trend line, you know what, I might just have to, there we go. Our main trend line from here, that didn't work out. Anyway, you'll just bear with me. it's just, you know, I'm not even gonna edit this because I don't think too many people see it. Let's do this. Let's just change it. A bigger color. Not a bigger color. Brighter color. Let's do this. Change it to bigger line. I think that's what I wanted to say. There we go. Alright. Let's move it there. Yeah, I'm doing a late post. I feel like I'm honestly, this is the end of my day. I just wanted to, my thing is I'm trying to build the habit of staying consistent. So even when it feels uncomfortable, like, man, I know I need to make another video if this is what I want to do, or one of my goals. But anyway, let's go back to this major trend line break. We had a kind of show some support here, and it finally broke. Now it's kind of going into a retest. So usually when these trend lines break, you know, a lot of times we have an itchy trigger finger, and you want to get in right where it breaks the trend line. And I still don't always do it. Sometimes if it breaks the trend line, I still would just sometimes get into it, even though I know that's not the best entry. It's better to wait for a trend line break and retest. Now, ideally, if you can get in on a retest where it retests the trend line and takes out some of these market maker liquidity levels, you know, I'm gonna get better. I'm gonna change the color up, but this is how I got my charts. I have to get in the habit, like maybe this purple line may not show up on the TV or your phone or whatever device you're watching YouTube on as well. So I'm gonna do better. You know, I'm just thinking on the fly. So, but I mark up these purple lines here, like I said, for past liquidity levels, where I would go back and back test the charts, and I've noticed the behavior always around those levels and the timing. So it's almost like during Asian London sessions. Here, I'll zoom in. During Asian London sessions, it's like they set up the traps. So since I'm in Central Time, I got this little indicator from TradingView where you can kind of block out the time. So starting at 1700, which is 5 p.m. to excuse me, to right at it says 6 a.m. on here, but I wanted to end on pretty much, you want to block out from 5 p.m. or 5 p.m. Central, the start of Asian session, to an hour and a half before New York session starts. So since I'm in Kansas City, Central, so I pretty much mark off my charts in the morning from 5 p.m. the beginning of the session, well, Asian session, through London, up to right before, of course, I guess they call it the equity hour. It's like, for me, it's between 7 and 8:30. So New York time, 8 to 9:30, like I said, pretty much an hour and a half before, 90 minutes before New York session starts. Anyways, I will mark up the highs and lows of that session. So we'll just say that was one level. Let's change the color, and let's mark up another level down here. So what I would do, I would keep track of this level. Come on, baby. Come on, mousy, work right. There we go. I will keep up with this level until liquidity takes it back out. And usually, if it goes up, clears it out on the top, that's usually kind of another indicator like, okay, it's trying to go down because it has to come back eventually. Or if it goes down, take out lower liquidity first of that session before it would take the lower out before it would go towards the high. So I would always, in my mind, or my eyes have been trained to think like for US 30, if it goes up first, it's going down. If it's going down first to take out lower liquidity, it's going to target the high side. So that's just how I've learned how to chart up liquidity. And don't get me wrong, there's always liquidity in the market, So there's always stops or pending orders that needs to get filled, or because the way the market moves, from my point of view, it needs liquidity. Liquidity is the gasoline for the market, like gas for cars, liquidity to the market. So it needs to stop out, needs people to lose money. So the institutions can make money. It's like, you can call it smart money, dumb money, smart money versus dumb money, or institutions versus retail. I just look at it, somebody has to lose. So the casino is not going to, the house never loses if you're trying to compare it to a casino. So anyways, I feel like so let's go back to this example. I feel like I'm rambling a little bit, but this is just me being me, y'all. So once we took out that liquidity, the high side liquidity, I would just delete it off. Oh no, I didn't want to delete that, but it's fine. I'll just delete that off of my chart. And you know what? I'd rather just leave it. Anyway, I delete it off my chart. And so that left me with this one. You see, it eventually came back down and took it out. Created a nice size order block before it impulsed up again. So, and just like it left this line here, this level here, it never came back out to take it up. It came down kind of like an inducement zone or setup, bounced, found support, came, and this was the end of that trading day. So each of these dotted vertical lines are my what they call session breaks. So it's just the start of a new trade day. So it goes from Asian London, New York, break for US 30. So like I said, part of my strategy, a lot of it's just timing, being patient. So we saw it, created all this liquidity, left it, created another liquidity, didn't take it out, left it, created liquidity here, it took it out, doing CPI. So it took it out and pulsed up, and it entered one of my sell positions because it's obviously overbought. It's due for retracement. So I am anticipating, because PPI, Producer Price Index, comes out tomorrow, which is latest. Well, comes out later this morning. I'm up late. It's after midnight. I'm trying to hurry up and squeeze this in. So hopefully I can get it uploaded in time. But so PPI comes out tomorrow, PPI Wednesday. So I'm thinking it's gonna be a little worse than what was expected, because we know these are like, PPI is the precursor to next month's CPI. So that's how the market tends to kind of interpret it. So whatever we get from the PPI is going to dictate what the CPI will be the next time. So, but yeah, let's go back to our chart. And I'm anticipating for a retest of this trend line, take out some more of this liquidity, or buy back, or whatever the market makers' intentions, because this was liquidity. Let's zoom in a bit. What date was that? February 15th. Yep. Right before it bounced and took out the lower liquidity. So it has to come back at some point. And that's the thing, we don't know when. It just at some point it has to come back and buy back these positions, or bomb back, or fill them in at a heavier book level. I don't know. I just know they have to come back and liquidate those positions at some point. And when I mean they, I'm speaking as like, if I have to think about it like if I was a market maker. And so it's just at some point they're in drawdown on some of these positions. They have to come back. And that's pretty much, let me see. That's pretty much my thesis right now, as far as this trade is still in play. So with the look at it, 1,200, a little bit over 1,200 point stop loss. But I'm feeling pretty good about this setup. So I'm actually in one position, obviously in drawdown, but I'm anticipating that it is going to at least come all the way back down to this level before it may continue. So, and it's probably be a bounce there, but I'm anticipating it to keep going further, but we'll see. Anyways, long story short, my thesis for this trade is still in play. So I think it's just going to keep going down and probably invalidate this minor fib. So that's one thing I always try to make sure I keep fibs on going both ways, because depending on which way the market moves, it just one fib will get invalidated and the other one will. So it's just the way it is sometimes. Like I said, it's late. I'm kind of trying to be consistent, and I was like, you know what, let me put up a video. Like I said, if you got some value out of this video, and do your YouTube stuff, and like and subscribe, all that stuff. Like I said, I'm just a regular dude from Kansas City. I trade, got kids, got a life. Just trying to make this YouTube thing work, man. Gotta keep expanding my skill set. So anyways, hope you guys enjoyed this video. Talk to you next time. Peace.